hello everyone, how are you been doing? I'm so glad to see you again on my channel. And this topic of our conversation today will be the psychology of trading. So we'll try to find out, is there any benefit from it? In addition, I will show you how I earn my money on trading, and watch this video till the end and you will learn a lot of interesting things. So in the description below this video, you'll find a link to my Telegram channel where you can ask me any questions you're interested in. And where you'll also find a link to my private Telegram channel where I share my daily trading skills. And I also run weekly marathons to help you increase your deposit from $150 to $5,000. Guys, this happens every week, so make sure to join this marathon. In addition, if you write my personal account on Telegram, you will get a link to sign up for PocketOption where they give deposit 50% absolutely free as an bonus for you. And guys, so now let's move on to the PocketOption and let's get started. So our trade will take place on the US dollar Chinese yen exchange currency pair. I won't change it because the profit on it is 92%. Having assessed the situation, I opened the first trade to a decrease at $350 for 1 minute. At this moment, the posts were at the upper limit of Donkin channel indicator, while I noticed their growth has stopped when the line of the Williams indicator began to turn around and move down, so this situation gave me a signal about a possible price reduction. Now we have time, we can try to figure out what influences our perception of the market and how psychology helps to achieve success. The psychology of trading can be divided into two areas, related to the people behavior in large groups, the psychology of masses, and related to the psychology of a particular individual. These areas are closely related to each other, and in order to understand the psychology of the crowd, you first need to understand how a single trader will behave. But about this in a second. And now our deal brings the first profit of $322. So sooner or later, novice traders realize that in order to succeed in trading, something more is needed than studying fundamental indicators and reading charts. Most of the problems are somehow caused by personal psychological characteristics. And here, the psychology of trading comes to the rescue. So one of the biggest traders' problems is fear. And this feeling is peculiar not only to beginners. Many professionals also complain that they sometimes experience fear of missing a deal, losing money, missing part of the profit, fear of being wrong. In general, all these fears can be called the fear of an error. Throughout our lives, from early childhood, we were taught that making mistakes is bad and wrong. For mistakes, we could be punished, put in a corner, deprived of sweets. As a result, it's written on our subconscious that it's absolutely impossible to make mistakes, and even more so to lose money. So let's take a break. So we see an interesting moment and open another deal to lower by $350 for 1 minute. The price began a gradual decline while the Williams line is also declining, leaving the overbought zone, which is located between the level 0 and -20, which again began a signal for me about a possible decline in quotations. Returning to the conversation, so since it's bad to make mistakes, and any mistakes will inevitably entail punishment, no one likes punishment. In general, it helps us to adapt in life and our brain to develop effective strategies for the implementation of the planned plans. But this scheme doesn't work in trading. Here is impossible to outweigh the quality of the work performed by the final result. So what about our deal? Its term ends and another $322 replenished our balance. Great. So we continue. In trading, in order to change the approach we are accustomed to, we need to clearly define our area of responsibility with the area of responsibility on the market. So if we start berating ourselves for a mistake, what exactly is our mistake? If you try to answer this question for yourself, a lot will become clear. You will see what the previously thought was your mistake is actually outside of your control zone in trading. Therefore, it can be your fault when understanding comes, when the fear of error will go away. Many traders are sure that the main thing in trading is to correctly determine the entry point of the market, and the rest is not so important. After all, it's the entry point that affects the outcome of the transaction. It will be profitable or unprofitable. It would seem that the deal is open and you can relax, but it's from this moment that all the most interesting things emotionally begin. Let's pause and open a $350 reduction deal for 1 minute. The Williams line is actively declining. This is happening against the background of the same active declining quotations, which, as you remember, is a signal of a possible price reduction. But do not forget that any signal shows only a possible development option and doesn't guarantee 100% that this development will happen. So let's get back to the topic. As soon as a trader enters the market, he loses control over himself and his emotional state. Now his mood depends entirely on what the market will do. If everything goes well, when the trader falls into euphoria, and if it's bad, the panic and despair begin. As a result, you seem to float on emotional waves and stop controlling your feelings. We see the completion of the transaction and another profit of $322. But there are people who trade on emotions and at will, open deals at the most unfortunate moment, when the euphoria in the market is already pouring out the edge. Any trend can easily turn into the opposite direction, and when the losses will grow and grow. So unfortunately, people often come to trading who are looking for adrenaline in it or think they can get rich quickly without much material investment. Such traders usually do not bother trying to really study and understand the market. They look around, read the same traders write on various forums, listen to different analysis, but they do not have their own understanding of the market and their own strategy. And without this, they will not be able to earn money. In the meantime, we will reopen a $350 reduction deal for 1 minute and try to earn again. Here, after a slight price adjustment, the decline continued, and as you saw, the Williams line was still declining, whereby giving a signal about a possible continuation of the decline in quotations. Let's continue the conversation. So, if there is no understanding of the market, then you can lose money very easily. Nevertheless, I advise you to learn to accept small losses in order to stop in time and whereby save capital for a big profit. Believe in it. If you have come to excitement and adrenaline, then the market will generously give you that. Only in this case, you will have to forget about making a profit. After all, if the pursuit of emotions, you will surely exceed the risk and violate the rules of your system and your strategy. Trading on emotions always leads to losses. And in our case, on the contrary, it makes a profit since the transaction was completed and $322 ended up in our pocket. So let's move on, because if you still decide to receive emotions from the market, well, you also need to accept the consequences. Who should be blamed for failures in this case? Whose fault is this? The market? Evil fate? Manipulators? Dishonest brokers? Insiders? No. The sooner you realize that there are no consequences of your decisions, the sooner you will begin to change the situations for the better for yourself. Beginners often ask me if knowledge of psychology has helped me in my own trading. Yes, psychology has taught me to see reality, to soberly assess my emotions. It taught me not to waste my strength and energy on regrets about past failures and losses. After all, they teach us and give us experience that we can use, but they do not determine our failure. It is determined by what we are doing at the moment. It's pointless to sit and grieve that what would be if. It helps not wishful thinking, but action. Each transaction is an independent event and it should not affect the next transaction or depend on the previous one. There will be always losing trades. Learn to accept these losses as a reality, but every successful trader faces. Any person has personal traits that he relies on when making decisions in the market. What do you rely on? On your mind, or do you define a transaction by feelings? Or maybe according to the information you get on the internet? Think about it. In the meantime, I'll open another trade for reduction for $350 for 1 minute, despite the fact that the quotes practically froze in one place and there was no clear signal for the Williams indicator. I made the decision, and that's why. The blue line of error indicator, which is responsible for the uptrend, has been declining all this time and now continues to decline. Respectively, the probability of strengthening the upward movement in the near future is quite low. Let's check if I'm right, but for now we'll continue. To make a profit, you must have a good trading plan, and you need to follow this plan regardless of the external information, while you must be ready to gradually improve it and your own trading strategy. Let's go back to our deal. Its term is ending, and it brings another $322 profit. We cannot help but rejoice. Returning to the conversation, I would like to know that a good trader doesn't change his plan during an open transaction. It works with what the market shows him because it's not known that will happen in the next minute. In any case, trading is a pretty stressful activity if you don't know how to manage stress when you may have problems. But what is your personal secret that will help you beat the market and succeed among all professionals? This is what you have inside. The world is as you see it. Only you know how you will react to criticism, a streak of failures, or a good profit. You have to realize this in order to learn how to control or, if necessary, change. Let's open another deal, but this time for $350 increase for 1 minute. This time the price, starting from the lower limit of Duncan, began to grow, and along with it, the line of the Williams indicator group, which became for me as a signal of a possible price increase. We'll find out soon whether I'm right or not, but for now we will continue. Do you want to become a successful trader? Well, realize that this is a lifelong activity. Get ready for a long process of self-study. In any kind of activity, a lot depends on preparation. Remember that when you press the button and open a deal, it's the result of your whole life to the current moment, and it's it who presses the button. This opens up the position of your personality, your money, all work on yourself. The secret of success in trading lies in real life. And our deal ends with a profit again, but this time only $126. The profit fell, and I didn't notice, but it doesn't matter anymore since our trading session is coming to an end. Let's look at its results. So this time we opened 6 successful deals with the help of which we were able to earn $1,736, spending only 12 minutes on it. A good result. The study of psychology seems to be an absolutely useless undertaking for many. This is especially true for beginners. Why it's necessary at all, they ask. Sobering up comes a little later, and this coincides with the loss of the first real money. That's when people start to think about why all this is happening and why it's with them, because everything seems to have been done correctly. After that, they are surprised to discover that it turns out that the problem is global in nature. Smart people then begin to work on themselves, eventually manage to take control of emotions and achieve success. And the rest continue to trade on the rake, losing one deposit after another. I hope this information was useful for you and it will help you to earn on binary options. After all, only practice can teach you to understand the market. But remember, if you don't have enough experience when before opening a deal, you need to carefully assess the current market situation. In addition, it's necessary to use indicators, the signals of which you understand, because their use reduces risk and allows you to make a profit over a long distance. I want you to continue trading by your options because only here the analysis methods are not complicated at all. And guys, don't forget that in the description below this video, you'll find a link to my Telegram channel where you can ask me any questions you're interested in. And you'll also find a link to my personal Telegram channel where I share my daily trading sales. I also run weekly marathons to help you increase your deposit from $150 to $5,000, guys. This happens every week, so make sure to join this marathon. In addition, if you write to my personal account on Telegram, you will get a personal link to PocketOption registration, which will give you 50% as a deposit bonus for free. And dear friends, this offer is very interesting and I hope that you've made the most from this video. So guys, thank you for being with me all this time. Thank you for watching this video till the end. I hope you'll like it and I hope you